When video games get real, it's GameStop. The Military Money Show is sponsored by Charles Schwab. Since 1973, Charles Schwab has been helping people achieve better financial outcomes for themselves and their families. You can learn more about Charles Schwab and the work they do at schwab.com. Hey, welcome to the Military Money Show, where I help the military community make, save, and invest money wisely. I'm your host, Lacey Langford, the Military Money Expert. If you've read the news or been online at all, you know something's up with GameStop. You may be asking yourself, why is everybody all worked up about their stock? And what the heck does Robinhood have to do with it? Or you could be asking, what is Robinhood? Well, we're going to break it all down for you. My guest, Andy Wang, is a managing partner at Runnymede Capital Management and host of Inspired Money. He has been named by Forbes as a top 10 personal finance podcast and named among INVESTOPEDIA 100's most influential advisors. He's also appeared in Barron's and Forbes. Runnymede is a fee-only registered investment advisor to companies, 401k plans, nonprofits, and individuals. Andy and I get into what's going on with GameStop, what it means, and why it's happening. We also talk about the role Fintech like Robinhood has played in this rare financial event. Andy also gives tips about how you can keep your financial head when the fear of missing out or FOMO struggle gets real. Here is my chat with Andy. Hey, Andy, welcome back to the show. I appreciate you being here.
So great to be back.
I am excited to have you on to have this discussion because I have a lot of questions. I know my listeners probably do as well. And I feel like you probably have a lot of answers. Fingers crossed.
My fingers and toes are crossed.
I want to start with what's up with GameStop? What is everyone so hyped up about? Like, can you explain how this all started and what is going on?
Well, let me start by saying that by the time GameStop news is everywhere, and it feels like it is literally everywhere. I see it, newspaper, online, Facebook, YouTube. Like, I can't escape it. When it reaches that point and everybody's talking about it, usually it's too late. So that's number one. But I can give some unique insight because I feel like I am one of the few financial advisors who actually owned some GameStop in client accounts. And I would say that this is the first time that I've ever experienced such a phenomenon. This is a unique phenomenon that is like a once in a lifetime thing. So we found GameStop because we knew that GameStop was like one of the most hated companies on Wall Street. Many hedge funds were shorting GameStop, meaning that they're betting that GameStop stock is going to go down. They borrow shares, selling it without owning it, and with the idea that they're going to buy it back at a lower price. So it's basically the opposite of normal investing. You're selling first and you're buying back. So you want to sell at a higher price, buy back at a lower price, right? That's the inverse of what you normally want to do, buy low, sell high. So we knew that it was a hated stock, and my kids, they wanted like gaming systems over the holidays. The PS5 and the new Microsoft Xbox Series X. Like, whenever there's a new game console, that usually helps GameStop, which sells video games and the consoles. It's a retailer, right? Like, I've been to them, either in the mall or in a freestanding store. And interestingly, this just goes back to like December. We noticed that Wall Street analysts, they were forecasting zero earnings for GameStop in 2021.
That's not good.
But we felt like that was not accurate because based on history, whenever there's a new game console, that drives foot traffic to the stores actually increase their earnings. And I don't think that was being reflected. And that's why we bought some GameStop under $20. So we said, number one, if the earnings estimates are not accurate right now, and there are going to be positive earnings surprises, we think that the stock can go higher and in a reasonably priced manner. On top of that, the founder and former CEO of Chewy, I don't know if listeners know Chewy, but that is it's like the Amazon of pet food and pet supplies. He is no longer the CEO of Chewy. He left. He has a company called RC Ventures, which is an investment company. He started buying GameStop, and not just a little bit. He bought about a 13% stake in GameStop, eventually joining the board and having 2 additional board members that he could bring in. So the idea there is that he feels like he can transform that company from kind of a tired retailer of video games to like a digital video game business that serves gamers, which tend to be very loyal customers. So those 2 things, if earnings could improve, and then if Ryan Cohen, the former CEO of Chewy, could actually transform this business, then the stock price could sell at initially maybe $40. If he could transform the company, $50 to $60. But what I didn't know is this battle of individual investors against the hedge funds, sort of Wall Street establishment who were betting against the company. I didn't know that there was going to be this head-to-head battle that would just drive the stock up astronomically to levels that don't make sense by any traditional valuation metrics. It makes no sense. Like, the thing just went to the moon. It's a bubble. When you have a bubble, things don't make sense. You can't really explain how high can it go? Who knows? But we saw very volatile action today. There was like a big sell-off. It bounced around.
Well, let's talk about just for a second. One, by the time this airs, things, might be a little different as we're recording it. But what's going on with hedge fund managers versus individual investors? And so the hedge fund managers, I just want to make sure I'm getting all this right. They were shorting it. They were thinking, hey, this isn't going to turn out well. So they think it's going to go down. So they're shorting it. While individual investors, right? And this, I think, started on Reddit, that they're thinking, actually, kind of you're thinking, that this stock could be undervalued.
That's correct. The hedge funds are betting against the company because their rationale is that video games are going to be like DVDs. They call GameStop like the next blockbuster, because if gamers start streaming games, digitally, they're not going to buy discs anymore. And therefore, GameStop is going to become extinct. In my view, personally, I think that it's a little bit early to call for the complete demise of GameStop, because in both the gaming systems, Sony PS5 and the Microsoft Xbox, they still have DVD drives.
Right.
So I think gamers are using a combo right now. So we're not quite there where DVDs are out. But you're correct. You've got the hedge funds on one side that have billions of dollars under management, and they're betting against the company. And then you have individuals who identified GameStop and other stocks that have a high short interest. That means that if you look at the total number of shares outstanding, the total number of shares available, a very high percentage of those shares are being borrowed short and sold short. And the rationale on the individual side is that if you have all these short sellers betting against the stock, they felt like if they can collectively buy the stock and drive the price up, then you're going to get an extra boost on your investment. It could potentially be a make money more quickly, because if you can force those hedge funds who have short positions, as the stocks rise, they have to get out of those positions because they're losing money. That's what's called the short squeeze. As they are buying stock back to cover their shorts and get out of their position, that stock price is going to continue to go up. This is one reason why short selling as a career, to be a trader who specializes just in selling stock short and betting against companies, it's dangerous mathematically, because if you short a company at $100, it can only go to zero. You can make 100%. If you short a stock at $50 and it goes to zero, you still make 100%. So the amount of money that you can make shorting a stock is finite. But if you are buying a stock long, it's kind of infinite, potentially, right? We always say as investors and as financial advisors, like, the magic in making money in investing is to buy companies and compound your growth over time. You can make money while you're sleeping. That's like infinite upside. So mathematically, it's much tougher betting against stocks than to own them over the long term and hope that they grow.
So that's what's happened, though, is they have had to sell off their positions and have lost. I mean, like, we're in the billions. I think they're talking about that a lot of the hedge funds have lost. And now other hedge funds are borrowing from other hedge funds to kind of make up for that. But what about the individual investors? I feel like you started off with, obviously, this is what you do for a living. So, but, with the right mindset that this is undervalued and, hopefully the price will go up. And sounds like individual investors were doing the same thing. And also with good intel, like you and I have kids that age. So we understand, like, actually, I've been to GameStop more than I've been to a lot of stores. They sell like little figurines. There's other things my kids want at GameStop too, besides just video games. But just the fact that, hey, they still have the drive, those type of things. So now the individual investors are doing the same thing, though, I would think, is selling off, right? Because now the share price has gone up like 1,000%. People have to realize, hey, this isn't going to hold. And so right now people are probably selling it that we're like, okay, now is a good time to get out. I've made a ton of money.
I have to admit that I can't get into the head of a lot of the individual investors who are posting on Reddit. I spent a lot of time last night in like the Reddit Wall Street Bets subreddit forum trying to read what people were saying. And my takeaway was that you have about 3.8 million people in that group. I don't know how many of those are actually buying GameStop, but it's a large number of individuals. And as a group, they're collectively, aggressively encouraging each other to buy GameStop, to buy the stock and drive it up. And they were able to successfully do that because, as I was saying, I felt like I had a rational, disciplined approach under $20. I'm like, this stock seems undervalued if the Wall Street analysts actually have their earnings estimates off. If earnings are going to come in higher because there's a new game console cycle, then if I buy the stock at under 20, it could go to 40. That's a double, right? That's pretty good. But in the Reddit groups, people are just saying, I'm going to buy irregardless of price, irregardless of valuation, and we only want to drive it up because there's this high short interest, and we're going to force hedge funds to get out and drive the stock higher, and this is going to be easy money. The consequence is that we did see a very large hedge fund, I think, at risk of going bankrupt or becoming insolvent. Like this Melvin Capital Management had to close out of its short positions on GameStop and on other stocks. And they say they weren't going to go bankrupt, but I think that they were in financial trouble because two other funds had to come in and infuse $3 billion into that hedge fund just to bolster their finances. So kind of crazy things happening. And if we look at history, like back in 1998, there was long-term capital that had made really big bets and their bets went against them. Suddenly, if you have a really big fund that gets into trouble, that kind of brings like systemic risk to the whole stock market. Because if you have a huge fund that suddenly has to unwind all its positions, that just can like drive the stock market down just because it's like a crazy phenomenon.
Well, and that's a lot of money. And when you're selling off that kind of money, that's moving the market. And that's the thing, what's happening in Reddit, right? That so many people pulled together, they move the market like a big institution would.
Yeah, so that becomes a philosophical debate because it's like, should they be allowed to do that? Is that legal? And I think that, some of the industry observers, they say, well, doesn't Wall Street do that? Don't big banks have a team of analysts who promote a stock to all their clients and try to drive a stock up? I mean, I see a parallel. Why is it okay for a big bank to do, but not for individuals to do, or for like millennials to do, or Gen Xers to do? Why can't an individual do sort of the same thing? But in reading some of the subreddit groups, it does sound extreme. I mean, pump and dump is illegal. And to some extent, it does sound like people are deliberately just pumping a stock. Everyone's just piling in to drive the stock up. they're saying not to sell, but at some point people are going to jump out. It's like, who's going to be the last guy holding when the music stops? That's the risk.
Yeah. I think it's going to be interesting how it all kind of comes out in the wash later. Because there's also, I want to bring up, what's up with Robinhood? How now it's like this whole novel, and now introduce a new character, Robinhood, into the story. What's happening with that, along with the GameStop? It's a tongue twister. GameStop stock.
Well, I think Robinhood's role is that Robinhood was among the first broker dealers to allow like commission-free trading, and made it easy to open an account with an app and not have transactional costs. So therefore, it was very easy for a lot of young people specifically to open up an account and start buying and selling stocks, right? It made it just very easy. And you combine that with the global pandemic when a lot of people were home. Students were home from school. People were home from work. So the interest in trying to trade stocks, I think, grew exponentially. So a lot of the trading is happening on apps like Robinhood. And Robinhood also would publish, like, what are the top 100 holdings of Robinhood account owners? And similarly, looking at those lists, I think people would kind of jump into the stocks. They'd use that as like a recommended buy list. Especially early in the pandemic, when you had companies that had gone down a lot, like airlines or cruise lines, those businesses were really not operating. So professional investors are like thinking, there's no way that I'm going to buy Carnival Cruise Lines. This is back like in March, April, because there are no cruises running. Money is not being made. It's like high risk. It's like, can some of these companies go bankrupt? Some of them could have, but Robinhoodies, as they're called, the Robinhood investors, they would just look at what are the top 100 holdings and then just go start buying them and driving stocks up. Like Hertz is a good example because I think Hertz had declared bankruptcy. Hertz made the list. So suddenly Hertz went from like under $1 to $5 or $6 as a bankrupt company. And it just defied logic. So when it comes to GameStop, a lot of the individuals who are in the subreddit groups and they are encouraging each other to buy the stock, many of them are buying it using the Robinhood app, but they're also using things like Interactive Brokers, Schwab, Fidelity, TD Ameritrade, which now belongs to Schwab. So it's individuals because like commission costs have sort of zero commission trading fees, just make it easier to buy and sell stocks. And if one is to speculate, then that also becomes easier.
Yes, it's definitely lowered the barrier of entry for making those trades and making them frequently. Before, you'd be like, oh, I don't know if I want to spend the money on that, like to make the trade. Well, in all of this, I feel like there's a bandwagon and there's this excitement, and then people get FOMO, the fear of missing out. Like, should I be doing this? And that may not be the best way to do your investment. So how can people keep their financial heads when something like this is going on? And I know this is big. Like, this is probably, like you said, like, I don't know, once in a lifetime, but this is once in a super long time at least.
Yeah. What are the takeaways? Number one, you've got to have a discipline for yourself, whatever that may be. So, in the example that we talked about so far, I felt like I had a discipline in doing my research to buy GameStop, to buy it for my clients, and then to watch it. I think one distinction that has to be made is that at some point, there's a shift from investing to speculating. And if one does not recognize the difference, then it becomes very dangerous because the risk rises exponentially when there's speculation, because you don't know what the price should be. You don't know what the value is. Nonetheless, the stock just keeps rising. It was like doubling every day. It would go up 100 points a day like nobody's business.
Which isn't normal for people that don't know that it's not normal.
Which is not normal. I mean, like that kind of growth, if you had like in 10 years, would be a good thing. And this was happening in less than 2 weeks. So This was definitely not normal. Even for a professional, what ends up happening is that it's hard to not be emotional because you see things rising so quickly and you have profits and it feels like the sky's the limit and it's hard to not be greedy. So I think number one, have a discipline. Don't have FOMO, which is really, really easier said than done. When it comes to discipline, I think for the majority of investors, the best discipline is still just to periodically and consistently buy the S&P 500 and go fishing. Like you don't look at it, you don't worry about it. You have to ignore when things like GameStop are happening because you're just not involved. And you have to just be content with that. You know, experts like Warren Buffett over and over again say that most investors would be best served just having a program for themselves where they're taking a certain portion out of their paycheck every pay period and buying the S&P 500. Then you just don't look at it. 30 years later, that has grown significantly. You missed out on 1 week of GameStop craziness, but emotionally, you're better for it and you didn't get hurt during it. Because with GameStop, if you bought at the wrong time, if you bought today, you could have bought today at $450 or $500 and the stock closed below 200. I mean, that's painful.
Yeah.
So you could be on the wrong end of some stocks like crazy buying and selling. It's a dangerous time. It's definitely a dangerous time. Speculating is dangerous and it's not for the faint of heart.
Yeah. If you don't understand something when it's going right, how will you understand it when it's going wrong? And if you're just doing it because that's what's on the news or that's what's in like a top rated list for Robinhood or because your friend told you, you don't have a really understanding of what you're giving your money to. And like you said, it could close out way less than you paid for it. And that's not the way you want to do it.
Yeah. I mean, the movement is fast. You can make fast and you can lose fast. And some people are willing to gamble. As long as you know that it's gambling, I suppose that that's okay. But you can't be naive thinking that there's no risk, you can't lose, and you're just going to make money quickly. And I fear that when I'm reading a lot of the posts, either on Twitter or Reddit, there are also Discord groups where investors are getting together, and you can kind of see it in what they're saying. There's this brashness, overconfidence that as long as we're doing this together, we can't lose. We're going to drive this up and we're going to make a lot of money quickly. And I think that the reality is that in investing and probably just about in anything that we do in life, timing is everything. And when it comes to that, sometimes it's better to be lucky than good. Like it takes a lot of luck.
Yeah. Also, too, I feel like, and maybe I'm wrong, so please correct me if I am, but for me, I think, being a financial person, like this is my career, like that comes with a lot of responsibility. I'm very, mindful of what I say because like they want me to answer a question like in a Facebook reply. And I'm like, I can't sum it up. Like there's, a lot of individual stuff. And if I respond to this one thing, there's these nuances that you don't understand. And I feel like some of the people that write those things, that's a passion of theirs. They understand investing a lot more and they're telling people what to do, but they know when to get out. They have a bigger understanding of what's going on, the playing field, all of those factors that go into making a decision that a lot of times has to be made quickly. And you're telling other people that, and they're not operating on that knowledge and that quickness of movement. And so I just feel like, hey, we should all do this. Well, yeah, that might be all fine and dandy until the point where it's like you have to flip the switch.
Yeah, it's hard to provide advice that applies to everybody.
Right.
Everybody has their own unique situation and their own goals and objectives, and everybody has a different stomach for how much risk they're willing to take and what keeps them up at night. A lot of people, it doesn't take much to stress you out and make it hard for you to sleep. So all those things kind of get incorporated into how you deal with your finances and how you deal with your money. And hopefully you or I can help someone through some of those subtleties because, oftentimes people need their handheld or they need that push to say, I know that you're worried about this, but if you look at your overall situation, like you can afford to take some risk. You can ignore some daily volatility because a month from now, a year from now, 10 years from now, you're going to be better for it. But yeah, it's really hard to give advice that just suits everybody right now.
Right. Oh, especially right now. It's very crazy right now. Well, so people are going to Reddit clearly and getting information about investing other places. What's your recommendation for, and I'm curious personally too, because I don't know that we've ever talked about this. Like, what is your routine? Like, do you wake up and read certain websites to get information, certain financial news? Like, do you read the Wall Street Journal? What is your routine for kind of staying current with investing and personal finance information?
Yeah, it's a good question. I mean, I try reading and listening to and watching everything that I can. Websites like Motley Fool, Yahoo Finance. I don't think that I'm going anywhere that is out of the ordinary. But I think that the key is that if you're trying to educate yourself on a regular basis, you start to identify like who are the journalists, who are the writers who write good material. And similarly, as a professional investor or as a financial advisor, I'm reading analyst reports from the sell side, from banks, right? They have analysts who are covering companies and covering different industries. Everybody's different. And you're trying to figure out like who has a good record, who has a bad record, who do you trust their information? That's probably the biggest challenge today. I think in the past, like when I started my career in the early 90s, it was always like a lack of information. And back in those days, it's like the biggest investors get the information first. They get the first call, they would call it. So back then, if you worked at a big hedge fund, you get the first call from the bank analyst giving you their stock idea. Today, there's too much information. I mean, between online publications, printed publications, YouTube, TikTok. I mean, people are going to TikTok for like personal finance.
I don't get that.
It's true. There's an abundance of information and you constantly have to like distill and filter out to figure out on your own, like which one do you think is actually useful? So it's not just a matter of saying that you read the New York Times or you read the Washington Post, you watch CNN or you watch Fox News. You need to figure out like who's the writer? Who is producing the content that makes sense to you and sounds like there is valuable information content that might be actionable. But then again, at the end of the day, maybe it's better to ignore it all and buy the S&P. That's the argument for just owning everything. It's like if you own the market, you can ignore all the noise that happens on a daily basis and worry less.
Yeah, that's how I am. I'm not into drama. And that's what a lot of it is. It's just drama that takes you, if I'm in it for the long haul, looking at it strategically. And if you're doing that, then it makes it easier to kind of not get in the fray.
Yeah, and I have to say for my firm, we kind of come at it at a hybrid approach because it's very atypical for us to have owned GameStop. But I think for our clients, one, we're trying to identify like what are their needs, what are their objectives, when do they want to retire, are they retired already, and then coming up with a plan. But then when actually looking at the investments, it's a mix of some individual stocks, some bonds, and then we'll own some exchange traded funds like the S&P 500 too. I think that there's not just, one size fits all, but I think that there are benefits to owning some individual stocks because you understand the companies and you really feel that you are an investor in a business. And surprisingly, I think that the benefit there is that it tends to just keep you in, like you're not trying to trade them.
Yeah.
If you own companies that you believe in, you say, this is a great company. This is a company that I want to own for 20 plus years. I'm not going to sell it, no matter what the stock market is doing. But there's also a benefit of owning the entire market. So for our clients, we'll own a mix. We'll own some companies that we believe in and we like the company management. We feel like the prospects for the company are good. And then we'll own some exchange traded funds because you get broad diversification. It's very inexpensive. And, you kind of have like best of both worlds.
Yes, but also too, you've done the homework. I'm going to put a link in the show notes for Andy was on a previous show. We talked to you about some of the research and the things you do for your work, but you're not just throwing a dart at a board. There is a lot of homework that goes into committing your client's money to something.
Yeah, I'll add that I think we're in a very unusual period, and maybe I don't have to say that at all since the topic today is GameStop. And GameStop is just one of the companies. There are many other companies that have a high short interest. And I think it's safe to say that there is a high short interest bubble right now because there are investors that are specifically searching for highly shorted stocks where they think that if they can drive it up, the stock is just going to take off because of the short covering, which means the short sellers have to buy the stock back. So that just it's more buying. It just compounds the buying. And my point is that because of the pandemic, a lot of company managements are not providing earnings guidance to analysts because last year they just didn't know what the business was going to look like 12 months down the line. So I think what we have is a situation where a lot of the earnings estimates that the analysts are forecasting, not that accurate. So one does have to do a lot of research. Great analysts are doing excellent work in trying to predict and forecast, are earnings trending up, are earnings trending down? Is Wall Street accurate? Are they over? Are they under? I think that the inefficiencies have actually increased. And it's kind of funny because it's kind of a byproduct of COVID. And it's because of the lack of visibility that company managements are they're we're not going to provide any guidance because we don't know. And the analysts still have to guess. But I think everybody's trying to be really conservative because it's safer to be under than over. So because of that, I think that we're going to see some pretty good earnings in the year ahead in 2021, which I think will be kind of fun to see. And one, I guess, argument for the market being okay this year, despite, its resiliency in 2020.
Yeah, it's been crazy. Well, any last final advice for people hearing this and just seeing all the craziness and, and this isn't an isolated thing. Stuff like this does happen where people kind of get caught up in the hype. How can they keep their head?
My parting words are to know what you're investing in as best you can, to have a discipline. And if you have those two things, you increase the chances of not being emotional. I think that emotional decisions when it comes to investing usually are not good. That's your fear of missing out, especially during those times. When you have fear of missing out, chances are that there's a much higher risk than reward. So be careful.
Yeah, definitely. If everybody's doing it, might want to pause for a second and think, do I want to join in?
Yeah, that's exactly right. I mean, they always say even just making a purchase, right? There is a benefit to be gained if you say, I'm just going to wait a day and see if this is something that I really need and want, or is it an emotional decision? And I think the same thing with your investments. It's I know that the stock may be running up, but if you can take a day to really try to be rational about your decision and not emotional, over time, that's gonna help you.
Yeah, I think that's why it's a saying, cooler heads prevail. Taking that day to calmly think about something and making sure that you're doing it for the right reasons, not because everybody else is doing it. So
easier said than done, but we have to keep reminding ourselves. I'm guilty too. I've been watching GameStop all day long for 3 days.
Yes. Okay. Well, I've got two quick random questions I just want to ask you. What is one resource or tool that you've been using lately that makes your life or business easier?
I feel like this is going to sound like a sponsored post, and it's not. I've just been using Microsoft 365 a lot because the suite of apps helps me. Everything from Outlook and email to the calendar, but then there are other apps that There's one called Planner, which is like Trello or Asana. So it's like a project management. I use Microsoft Bookings, which is like Calendly. Just any of those apps. So it's not just Microsoft. It's Microsoft because I use that for work, but it's any of those apps. It's Calendly or Booking or Acuity scheduling for trying to set up a meeting and maintaining a calendar so I know what time I'm supposed to talk to Lacey.
Yes, I'm the same way. I'm all about, if it's not on my calendar, it's not going to happen, or I'm going to totally forget. So yeah, I use Calendly. I'm a fan of that one. So, okay. What is a favorite book of yours? Maybe something you're reading right now, or a favorite book of all time?
A favorite book. I'm going to hold the book that I have on my desk right now because that'll be easiest. I just finished reading this book, Connect, which is by David Bradford and Carol Robin. This book came out of a Stanford Business School class that's also known as the touchy-feely class, because even though it's business school, it's about how to build exceptional relationships. And it's kind of a handbook for how do you have better communication to build better relationships. And it's really for leadership of a company so that you can communicate better with your employees, but it extends to personal too. It's like, how do you have a better conversation with your spouse and your family members?
That sounds like a good recommendation.
The idea is just that, well, here it is, building exceptional relationships with family, friends, and colleagues. So who doesn't want that?
Yeah, good recommendation. Okay,
I'll be sure
to put links for that in the show notes. Some of us need it more than others.
Also depending on the day.
Right, yes.
Certain days I'm just going to hand out these books. Maybe it's not me, maybe it's them.
You don't even respond to him, but like, just go ahead and read this and then come back to me.
Yeah, exactly.
All right. Well, now it's time for my favorite part of the podcast, which is game time. And today I have a very special game. It was given to me by my wonderful editor, Steve Stewart, and it is a pod decks, and they're interview decks to get conversations started. So I thought I'll just pull 4 cards and see what Andy thinks. One of them, I just want you to know, I pulled, and at first I was like, ooh, I shouldn't read that one. But then I thought, no, this is so weird. I should read it. So I'm just going to start with this one. This is the gift. All right. How much would someone have to pay you for your little toe?
That is a good question. I'm going to say there's no price for that. I don't think I'm willing to give up an extremity.
That's what I'm saying.
I think I want to keep all my extremities.
Yes.
You know, if I'm going to lose an extremity, it's going to be because of frostbite, not because someone gave me $5.
Yes. I just feel like that is going to involve cutting and some anesthesia, or maybe no anesthesia. So, okay. What would be the worst ingredients to fill a burrito with?
How creative can we get?
It's up to you, Andy. The sky is the limit.
Okay, I'm going to go with durian fruit and chocolate sauce. I don't know if you've ever had durian. I haven't actually had fresh durian, but it's a fruit that's known to have a terrible smell. But people love it.
That makes it funnier.
But it's like a fruit that's loved or hated. I don't think there's any in between. So it's very binary.
Okay, I've never had that. I was thinking like something like sardines would not be good in a burrito, but maybe to some people they would. I don't know.
I've never been to Singapore, but I understand that there are stickers in the bus that say no durian. Like you're not allowed to eat it publicly because the odor is so strong.
Really? That is interesting. That's like a coworker that heats up like fish. Like that's kind of like a unsaid rule in the office. Don't do it. Don't do it. Don't do it.
Yeah, you don't need stickers around the office. But yeah, public transportation, no durian.
Interesting. Okay. Next one. If everything in your house had to be one color, what color would it be?
I don't know. I'm going to say purple because I really like Prince.
That is an Andy fun fact. I thought you were going to say, something like your wife likes purple and that would make her happy. But no, you're a Prince fan. Good to know.
I'm like a closet Prince fan.
Oh my God. Have you ever dressed as him for Halloween? Tell me the truth, Andy.
I have not, but I should.
2021 could be your year.
It would be better if I were shorter. But yeah, a little pencil mustache and walk around with a guitar. Maybe. I don't think I could pass as Prince. I don't think there's like an Asian Prince, but who knows?
I'm sorry. I really hope you do it. Just take a picture for me, put it on social media, tag me.
I've seen a Chinese Elvis named Chelvis, so why not a Chinese American prince?
Would be.
It's 2021, you know.
I said go for it, Andy. I said go for it. I really hope that we get invited to the same Halloween party this year. Even though we live in different states. Okay, last one. Would you rather give up all drinks except for water or give up eating anything that was cooked in an oven?
That's like a really weird question.
Yes, so you have to give up all drinks except water or give up eating anything that was cooked in an oven. You like the toe question better?
Yeah, this one stumped me. Like the toad question, not a problem. I guess I'll go with anything cooked in an oven because, you know, you can like put it on the stovetop, still with plenty of variety. I think I'm okay.
Put it on the grill. Yes. Okay, I think that's a good answer.
If I just grilled everything, I'd be fine.
I enjoyed this game, Steve. Thank you very much. I thought this was fun. And this was only the first 4 cards I drew. I can't imagine what the rest of the deck holds. So this is a good one. I might be wearing this game out, listeners. Just heads up.
I have a deck somewhere. I was going to see if I could grab one and ask you a question.
Okay, do it.
You're going to be the first person that I've used this with. All right, so I'm just going to ask you one question.
Okay.
I'm going to ask you one question, and I'm going to shuffle it properly and pick one from the middle. All right, let's see what we've got. What's something weird that you recommend everyone tries at least once?
Ooh, I'm super weird. So I've got like 10 things that just popped in my head. No, I would say to try cinnamon on a fresh banana. Have you ever had cinnamon on a banana?
I've never had cinnamon on a banana, but I went to Acapulco one time and they made banana shakes. And I noticed they put a lot of cinnamon in it, and it was delicious.
Yes, that is my favorite thing. I don't like really, I think I'm allergic to ripe bananas, so I like more green bananas. And then I sprinkle a lot of cinnamon all over, and it is so good. I don't know why I ever picked that up. I think I read one time that when you have micronutrients are good, and cinnamon's, I think, a micronutrient. I could be totally wrong, so that might want to Google that. But I tried it and I loved it. And so that's like one of my treats. I don't like a lot of fruit, so that's one of my go-to. So it's a little weird, but yes, try it.
Okay. Thanks, Lacey. I will try that. I don't know how weird it is, but I'm going to try it.
All right. I'll have to. I'm sure something weird is going to come to me later. If it comes to me, I'll put it in the show notes. So, well, I really appreciate you coming on the show. It was wonderful, all the knowledge you shared. Plus, this was a really fun game, and it was great to catch up with you. So, can you tell everybody listening where they can learn more about you and what you're doing in your podcast?
Absolutely. So, I'm an owner and financial advisor at Runnymede Capital Management, also the host of the Inspired Money podcast. If you go to inspiredmoney.fm, it will take you to both my business and my podcast. So, happy if everybody would check it out and let me know what you think.
Yes, definitely. And I'll put links for everybody in the show notes. Thank you again, Andy. I really appreciate it.
Thanks, Lacey.
Thanks to Andy for coming on the show to talk about what's going on with GameStop and how you can keep your financial head through it all. Thank you to Charles Schwab for providing support to the Military Money Show. To learn more about Charles Schwab and how they can help you reach your financial goals, visit schwab.com today. You can head over to lacylangford.com to get the show notes and all the resources. I appreciate you listening, and I will talk to you next week.